Okay, now we're going to reference gross income, the inclusions and exclusions of it. Okay, I'm gonna share the slides here. And we're gonna have a view that hides that. Okay. So again, we're going over chapter 3, gross income inclusions and exclusions. Let me just make sure this is recording right now. And it is recording. So now I can go back to this. Okay. So as indicated here, let me see here. As indicated here, income recognition for tax purposes, right? So it's talking about the similar to the recognition for accounting purposes, okay? So when we think about just taxes in general through the calendar year, right? So what does the calendar year mean? What does that mean? What dates is that?
January 1st to December 31st?
Yes, January 1st to December 31st. And what does cash basis mean? Cash basis. Oh man, we got to know that one, man. Cash basis. So cash basis is basically all the transactions deal with cash, right? So we're only going to record what comes in and what goes out based on those cash numbers, right? So what's the difference between cash and accrual basis? So what's accrual basis? That's something we got to know, man. Accrual. So remember,
adding up without getting it yet.
Yes, there we go. So the accrual basis means that, so think about it. If you go to the gas station and you pay for the gas with the credit card, does the gas station immediately retrieve that money? No. But isn't it going to go in sales for that same day? It's still going to be in their sales numbers, right? Because they're using accrual basis, right? So think about if you are, I don't know, you're selling lemonade on the corner, right? What basis do you think you're using? Accrual or cash, right? Because no one's paying for their $2 lemonade with their credit card or debit card, right? Or another example, hair salons. What do you think they usually use? A lot of cash. So now it's been a lot of accrual basis, especially nail salons as well. But most of it is based on the cash basis. Okay. Barbershops, usually cash basis. They usually say car washes as well. Car washes is cash basis, right? So it's saying here, income recognition for tax purposes. It's similar to the recognition for accounting purposes. Income must be realized and earned. So when it talks about being realized and earned, that means that it's just mainly just using cash basis, right? So as soon as you pay for it with cash, you have to record that earning, or you have to record that expense. Okay. So again, but in accrual basis, even if you didn't receive the cash, you're still gonna put it down as if it was cash basis. Okay. So Walmart, for instance, again, they use a lot of credit cards there, right? So they're gonna record the sales based on all the transactions that they have. So I'm gonna ask you another question. Have you guys ever went to maybe, let me see here, maybe a corner store, or maybe you're buying a very small item and then they say, oh no, there's a minimum of $5.
Yeah.
That minimum, right? Is there really a minimum? There's no minimum.
I'm just trying to make it worth their time.
Exactly. That's actually illegal, right? So if you were to go call MasterCard or Visa or American Express or Discover and tell them they wouldn't use my card because it costs too low, they could take their privileges from using that type of card. Yes, they can. Right? Because I used to work for Bank of America, right? And essentially, I study credit card laws and stuff like that. That's essentially what it is. But does the average person know that information? They don't know. So they're going to take advantage of that fact, right? So I guess for me, what it was that at one time I went to the auto parts store to just get something like $2, $3, and then I went to the register. She was like, "Oh no, we have a minimum of $10," and I'm like, "Oh, I'm so sorry." Then I started walking back. I'm like, "Wait a minute, what's going on here?" Right? They're bamboozling the guy that knows the information, right? So I'm like, "Nah, man," because what it is that it's going to increase their earnings, right? So it's another methodology to get you to pay for something else that you don't essentially need. So what was I going to do? I was going to pick up something that I don't need, right? So no, I went to the register and I said, I understand that you said there's minimum $10, but I used to work in the credit card industry, and I don't find that to be true. So let me speak to the manager because I don't think that's true. I used to work in the credit card industry, and she said, and then she started panicking, right? So she faked it like she went to the back, and then she came back. She was like, "Yo, my manager said it's okay this time. It's just okay this time." I'm like, "Okay, all right." Right? So what essentially happens, so nothing is blocking it from being swiped, right? So it's just a fee that normally they're not going to get a lot of money for. So they're like, man, you know what? It's not going to be worth the fee. But technically, your debit card, if it has the logo on the door, which is Visa, MasterCard, Discover, or whatever it is, they have to accept it. That's mandatory rule. They have to accept it. Right? So don't be fooled, man.
And why is that? Because they want you to buy, like they want their sales.
Yeah, so based on their agreement, you're agreeing. So it's an agreement between the transaction machine and the merchants and the company, right? The company that is conducting business, right? So the agreement is, hey, if somebody shows you their Visa card, you can't push them away to try to get something that's going to be beneficial to you, right? So no, it has to be beneficial to all parties. So don't try to finagle the system and just use our logo to get people in. And then when they come, you say, oh no, you can't use it because that's false advertisement, right? So you can't false advertise, okay? So that's one point. Yeah, man. No, don't be bamboozled, man. Because that's exactly what's going on. They're taking advantage of the system.
I don't know if they still do it, but the diner over here used to do that. And I never knew that. But the diner literally has like system here, like you have to, if you're gonna pay credit card, you have to pay $5.
Mm-hmm.
I had no idea.
Yeah, most people have no idea. And remember, life is all about if you're ignorant to what's going on, right? So if you're ignorant to think that an Apple phone is so much better than an Android, and you're willing to pay $1,000 for it, what do you think they're going to do? Jack up the price because you're ignorant to it, right? If you truly believe that by buying some Jordans that you are going to play like Jordan, if you're that ignorant, that's what's going to happen, right? So, I mean, that's just what it is. Everyone is basing things off of your ignorance. And sad to say, I mean, I don't want to put it on an education level, but you are in these seats, right? You're in these seats because you're ignorant to what taxation is all about. So if this was my business, technically, I'm saying you got to pay me for my information that I know, right? So everyone is basing things off of the ignorance. You don't know how to do certain things to fix your car, right? So what do you have to do? You're ignorant to how to fix your car. You got to go to a mechanic. So everyone is basing how they make money off of their another person's ignorance, right? So it could be ignorance, or it could also be that you just don't want to do it, right? So maybe I know plenty of accountants, and some of them are tax accountants who never prepare their tax returns, right? They prepare other people's tax returns, but theirs, they're always lagging behind. They're like, man, I really don't want to do that. So they just give it to another tax accountant. Yeah.
When I had my internship at Northwestern Mutual,
Yeah.
I had this our managing director was like, yeah, I don't mess with my finances. actually
Yeah.
when I was in the company doing that for me.
Yep.
I'm like, why? Like, aren't you a professional? Yeah, but I don't
Yeah.
have time for that.
Yeah, you don't have time for it. It's something that you really don't want to do. Even for me, my tax return, that gets created like April, the last day.
Oh my God.
Really, it does. Because I'm so worried about other people's tax returns. I don't even think about mine. Right? So I'm like, hey, I'm going to get it done someday, so it really doesn't matter. Okay? So what else are we referring to? So we're going to reference to, I'm sorry, let me go back. Okay. Interest. And when we talk about interest, it says here, interest taxability. Interest from banks is taxable. It doesn't matter if it's savings or loans. It doesn't matter if it's a credit union. Interest is taxable. I often hear people say to me, it's under $10, so I don't have to report it. That is not true. Why? Because the government wants to see absolutely every bit of income that you have, right? So now the real thought process is if it's under $10, then they don't have to issue a statement. Very different, right? They don't have to issue a statement, but you still need to report your interest earnings. So for instance, if you had 1,000 accounts, right? And they were all under $10 for it, right? So 10 times 1,000, then obviously you have $100,000 just sitting there. You don't think the government wants to hear it? Yeah, they want to know about it. So that statement is absolutely untrue, which is if it's under $10 that you don't have to report it, you do have to report it. Okay. So it's also saying interest earned on E and EEUS savings bonds. Okay. And again, it may be on an annual basis or fully at maturity. So an annual basis may mean that if they're reporting your earnings annually and it's going to be compounded for the next year or two, then you have to report it every single year. Or if it's saying at maturity, if it's going to mature to say make $100 after 5 years, you may have to report that $100 after the 5 years are done. Right? So that's what it means when it says based on maturity. Okay, it's also saying some interest received is tax exempt if the debt is issued by the state, U.S. possession, or subdivision thereof. Okay, so what that means is if you're buying tax bonds from the state or from the U.S. government, those can possibly be non-taxable. So what are a lot of wealthy people doing? They're buying a lot of state bonds because they're not going to be taxed. So it's better than putting it in your bank account, right? And getting that little interest and being taxed on that amount. Just buy the US savings bond, just buy the state bonds, and then you won't be taxed on that income that's being generated. Right? So it's these little tools that other people are using that the average person doesn't know, right? So the average person doesn't know about the credit cards, and the average person doesn't really understand about the U.S. savings bonds and the state tax bonds, right? So again, that's why I'm saying, as an accountant, you should be one of the wealthiest individuals around because all these little tricks you should know that other people don't know. Okay. So other types of interest that may be reported, I indicated here payments received from seller finance mortgages, right? So the interest that you receive if you sold your home yourself should actually be considered income, right? So think about it. If if your sibling was buying the home from you, and you said, "Hey, I'm gonna receive the payments, and every single payment is gonna be a certain amount of interest per year," then obviously that interest per year or that interest per month is going to be interest income for you from selling that home. Okay. Okay. And it's saying here, if the amount of interest is more than $1,500, use Schedule B for forms 1040A and 1040. So now let me go to Schedule. Let me see, Schedule 1040B. Let me see. I'm going to give you an example here of Schedule 1040B. And I'm going to share that. I'm sorry. Let me just share another application here. Wow, it's only showing me one window. Shouldn't. Let's look at another. I'm going to open up another tab. So I opened up another tab. I'm going to share the application. Okay. Okay, now I'm going to share that. And now I'm going to say Schedule B, B 1040. Schedule B 1040. Right, so from that Schedule B 1040, okay, right. So Schedule B 1040, as indicated here, if it's too much, you're going to start naming it right here, right? So you're going to put all of the banks right there. And if it's dividends, you're just going to list the name of the dividends and start listing them right there. Okay. So if it's over a certain amount, they probably want to see exactly who it's all coming from. Okay. So now, okay. Okay, now we're going back to this. Okay. Also, I already referenced the dividends that I was suggesting here. As it indicates here, dividends are distributions to shareholders, income that must be reported on the tax return. So again, the mandate is that every piece of income that you have should be reported on the tax return, right? So for instance, many of us have laptops, and maybe you're trying to get a new laptop. So what I normally see with the Apple is that you have it for a couple of years. You paid maybe, how much did you pay for your laptop, your Apple?
Oh, yeah, man, it was like 15?
15.
Yeah.
Okay. Okay, so you have situations where somebody paid $1,500 for their Mac, but they want to get the one that's like $2,000, right? So maybe after a couple years, you sell your $1,500 computer for say maybe $600, right? It's still in good working condition, but you want to upgrade, right? Technically, your $1,500 minus your $600 is your profit of $900. That should be on your tax return, right? That should honestly be on your tax return. So little items that you're selling in a yard sale should still be on your tax return. Now, how many people are doing that? No one's doing that.
From a yard sale?
From a yard sale, because it's income. It's considered income. So think about it. If there's some antique items there, can you just start randomly selling antique items and don't tell anybody about it?
Sure.
Right? So it's kind of like selling something on eBay, all right? I haven't sold anything on eBay, but I think the way that it works now is that you get like, there's a form out there called, has anybody sold on eBay? Yeah, so do you get a form? You didn't get a form?
I don't remember.
You don't remember?
It's been a couple of years.
Okay, let me see here. Let me see here. So I'm going to say 1099K. And I'm going to come here. and I'm going to say share a certain type of application, 1099K. Okay. So understanding your 1099K, you will receive a form 1099K from each payment settlement entity from which you receive payments and settlement of reportable payment transactions. Right? So there's a lot of individuals who are receiving 1099Ks based on their transactions. So as you can see here, right? So think about the third party. The third party may be eBay, for instance, right? So eBay is telling you every single month, this was your earnings up to a certain amount, okay? And then you have the gross amount in letter 1A, payment card third-party network transactions, which is basically credit card transactions, which is essentially all the transactions you're gonna have in eBay anyway, right? So it's gonna either be PayPal or some type of other form of payment, which is credit card, okay? So with that, now, what am I doing? I'm going to share the other application again. Okay. So again, we're establishing that all of your income should be recorded to the IRS. It's saying here tax rate is 15% if the taxpayer's marginal ordinary income is 25% or more, but for 2015, if an individual's marginal ordinary income tax is 39.6%, the tax rate on qualified dividends is 20%. So all they're saying is that the percentage of how much your dividends are taxed are all based upon how much you earn, right? So essentially what it's saying is the more money that you earn, the more money that you're going to be taxed, right? So remember when we talked about Mitt Romney and we talked about people who are very, very wealthy, they're usually using those stock options, right? Those other ways in order to generate income and not through these W-2 wages that are just inflated with the tax rates. Okay, and as it says here, tax rate is 0 if the taxpayer's marginal ordinary income is less than 25%. So what they were saying about Mitt Romney is that he was paying 15%. He was in the 15% tax bracket. Why? Because he understands about tax bonds. He understands about these other serial bonds that he can have tax-free, right? So again, we can't fault people who just have the information. They have the best accountants, right? They have the information. Okay. So it says here, tax stock dividends and stock splits are generally not taxable to the shareholders. Do we understand what a stock split is? Stock split?
They're going to give you 2 shares for every one. If it splits in half, the price goes from like $100 a share to $50.
Exactly. So what do you think that helps them do too?
Helps them sell more shares. Makes it
Yes.
more attractive price.
Now think about it. Apple, right? Maybe they started at $5. Maybe they started at $10, right? Maybe Apple at one point was like $500 a share, right? We may not be able to afford $500 for one share, but we may be able to afford $250 for one share, right? So now because they're splitting the shares, right? Now you may be able to get into that market because they split the shares, right? So the stock split is just splitting the cost of that share and splitting the amount of shares. So possibly more people can get into the market, and especially so you can keep on sharing all that you have, right? So remember the reason why organizations love people buying stock, because essentially that is free money that they're getting to possibly give you future earnings, right? So it's free money. So why do you think a lot of organizations are trying to inflate their earnings so you can buy into their stock, give them free money, and then they take the money and do something else with it, right? So that's the whole notion. Right, so I'm not going to say that every company, that's their notion, but that's what potentially can happen. We also need to understand that when you file your tax return if you're making a certain amount, if you complete a Schedule A, and we talked about the Schedule A is mainly for itemized deductions, right? So if you complete a Schedule A, then you may be liable for adding whatever money that you got from the state on your tax returns, right? So we're Pennsylvania residents. You file your Form 1040, and you also file your Pennsylvania form, right? So whatever refund you get from the Pennsylvania form is now considered taxable income for that next year. So if you got a $500 refund, now that's $500 that they're going to tax again, right? So that money's been already taxed, right? Because you got a refund based on your earnings, and your earnings were already taxed, right? But now you just got your own money back, right? And then they're going to tax you for getting your own money back.
It's like a vicious endless circle.
It is. Mind you, it's your own money, right? You're taxing me on my own money.
Just like, why should you get taxed for the stock market? You already paid tax on the money that you're using to buy stock.
You're absolutely right.
So if you're smart enough to use your money to earn money, why do you get charged?
Hey man, they're charging yard sales, man. They're charging lemonade stands. And this is why actually I was sharing with my buddy. He has 4 kids, right? So we're constantly talking about like the cost of having children and stuff like that, and we know it's a high cost. But then there was somebody like, I think in like Brazil or something, one of these South American countries, and then they had 13 children, right? And they had 13 boys, and they said they're not going to stop having children until they get a girl, right? So realistically, right? Can you do that in the United States? Really, realistically, like on Pennsylvania,
Yeah, you can.
you can. You can. Doesn't mean it's a good idea, but you can, right? So what I was saying to him.
I'm from Mennonite and Amish country.
Oh, really? Oh, okay. Oh, so are you Amish or a Mennonite?
No.
Oh, okay.
I grew up in the area. There were Mennonites and Amish. They always have huge families.
Huge families, but okay. So are they going to college? No. You can't pay. I mean, I could only imagine if everyone is not getting a scholarship, 13 people times over 50 grand. Forget it, right? So what type of fields are they normally getting to? I guess the carpentry.
Trades,
Yeah.
farming.
Yeah. Right. So when I thought about the Brazilian couple, I'm like, well, really, what are they really living for, right? You're living for, you may go to school. You may get that 8th grade education, right? But they're not really living for, oh yeah, I'm going to put my kids through whatever. But essentially, really, they may be happier than us, right? Because, I mean, if they're talking about more kids, I think they probably have food on the table, right? So whatever trade the father has been enough for the family. But we're living in the United States, and whatever we have is not enough for the family, right? You can't really realistically live on one income, right? I don't care if it's an apartment that you have. I mean, I was looking for an apartment for my aunt in a little bit near upstate New York, and it wasn't really a nice places like Spring Valley, Nyack, $1,500 for 1 bedroom. 1,500. And I'm not even talking about New York City. I'm talking about upstate New York, where the population and the income isn't as much as New York City. All right. So in another country, you can do that, but possibly not here. Okay. Your Social Security benefits, right? When you think about these Social Security benefits, it does sound like, I guess, an okay idea. But remember, your max benefits maybe for $24,000, maybe something like that. You're not going to really get much off of your Social Security benefits to be able to live for tomorrow, right? So your Social Security income is not enough income. It's not enough income for you to survive off of. Now you think about it, the average person is making about $2,000 off of Social Security income. When you add in your expenses of maybe $1,000 rent or mortgage, you're left with $1,000 left to pay, if you want to, I don't know, get your hair done, gas in your car, And yeah, right.
Luxuries.
Man. Right. So 70, your car insurance. What else do we have? If you need a new laptop. Now think about it. If your laptop breaks and you only make $2,000 a month and you're barely saving, how can you afford a new laptop? You can't afford it. You can't afford it. You're on Craigslist looking for another, right? You probably just have a desktop, right? Or just rock the old laptop, right?
Yeah.
That's all you can do. So it's also called provisional income, right? So it must be calculated and compared to the threshold amounts to determine taxability. So if you only have Social Security income, they won't tax it, right? But if you have Social Security income and other income, then they start holding you liable to taxing that income that you're retrieving from Social Security. That's the bad part. So what they're saying is, if you have all the other types of provisional income, so if you have adjusted gross income before Social Security plus interest on bonds, tax exempt interest, employer provided adoption benefits, right? Excluded foreign income, right? So they want to know, again, people think that, oh, we're only talking about American liabilities, we're only talking about American income. No, your tax return is for worldwide income. So if you're generating income in Australia, it's their income, right? So you can't just say that it's not their income, okay? Even deducted interest on educational loans, it may be considered income. Yes?
I'm sorry. Can you repeat that again? You're saying that if you're making income in Australia,
Yes.
it is the federal government's money, or
yeah, you have to show it on your tax return. Now it may be excludable income. It may be excluded. So in certain countries, they may have a treaty with that country that shows that. So I can give you an example here.
You can probably show that you pay taxes in that country.
Yes, exactly.
So if you pay taxes in the other country, they can pretty much waive it.
Yes, they can waive it, right? But again, think about it. And I know my parents are from Haiti. I don't think we have tax returns, to the best of my knowledge, right? So whatever money that I would be creating in Haiti has to be taxable, right? Because it's not being taxed any other type of way.
You would think that'd be out of their jurisdiction, but I guess not.
No, worldwide income, man. Yep, they're greedy. Worldwide income.
Greedy.
Yep. So let me see here. So I'm going to share this. Let me go here. I'm going to share this. I'm going to share this file here so we can reference the tax treaties. Right. So it says here the United States has tax treaties with a number of foreign countries. Under these treaties, residents, not necessarily citizens of foreign countries, are taxed at a reduced rate or exempt from U.S. taxes on certain items of income they receive from sources within the United States. Okay. So let's see. Yeah. Let's say Japan. Let's see the agreement with Japan. Technical explanation. Wow, they've had one since probably 1971. Wow. Yeah. So it's talking about royalties, income from property. Let's see independent personal services. So they have a certain type of agreement with Japan, and it's saying income derived by an individual who is a resident of a contracting state from the performance of personal services in an independent capacity may be taxed by that contracting state. Okay. The individual is present in that contracting state so they're saying that they're going to be taxed if they've been there for at least for more than 183 days. Okay. And it may be not taxable if it doesn't exceed $3,000 or if it's equivalent in Japanese yen, right? So what does this mean? Tax is a lot more difficult than what people really see. So it's just not like our basic income tax 1040 stuff, right? We're talking about tax treaties right now. So what I'm saying is there's so many parts of taxation that you can be a professional of. For instance, when you talk about the accounting firms, so we have the big four, right? The big four accounting firms. What are the names of the big four accounting firms?
KPMG.
KPMG, yes.
PricewaterhouseCoopers.
Yes, PricewaterhouseCoopers.
RKL.
No?
No.
Ernst & Young and Deloitte & Touche. Actually, now I think they're just called Deloitte now, right? So remember the accounting firm names are just derived from usually like people's last names, right? So with that being said, the reason why I'm referencing that is because I remember when I was doing some work with KPMG, there was whole departments. So think about the income tax return, right? And we know the 1040 and we know the Schedule A. There's tax accountants that all they do is complete a Schedule A all day. That's all they do, complete a Schedule A, right? And then there's another person, maybe there's like a Schedule C for businesses. All the person does is complete a Schedule C. And then that portion of the tax return goes on to another person who's going to complete like the Schedule A and stuff like that. That's how sophisticated it is, right? There's tax accountants. All they do is complete the state tax return and that's it. So you may have a specialist who just does Pennsylvania state tax returns or maybe New York state tax returns or New Jersey state tax returns. Like they're just experts in that specific return, right? So again, for taxation, you don't have to be, oh yeah, I know the whole 1040 and I know the state tax returns and I know this. You can just be an expert at one specific thing, right? A lot of people don't know that, okay? So it's saying here, if provisional income exceeds certain thresholds, 50% of Social Security benefits are taxable, right? So I'm going to give you an example here. So the example here is Karen files a return as a qualifying widow. She received $7,000 of Social Security benefits, $19,000 of interest income, and $5,000 of non-taxable municipal bond interest. Her provisional income is $27,500. How did we come about that? Right? So we have the 19,000 plus the 5,000, that's obviously 24,000, right? But now there's an extra 3,500 that we're accounting for. We're accounting for it because of the Social Security income. Because we reach certain thresholds of over the amount, right? So if you're single, that person made over $25,000 based on this income, right, of $27,500. So they made more, right, if you add everything up. So because they made more than $25,000, they had to get 50% of the Social Security income and add that to their total income, right? So why? Because all of Social Security income is not going to be taxed. The maximum rate, I believe, is up to 85%. Right? So they're only going to tax you up to 85% of Social Security income. However, remember, if you don't have income from other sources, then you essentially don't have to pay any taxes on Social Security income. So what's happening a lot of times that I see is that people are retrieving Social Security income and they'll put other things in other people's names, right? They'll put it in their kids' names, right? So it doesn't show up on their tax return. so they can still get a benefit. Other types of income that we don't normally think about. Jury duty. Has anybody ever been called for jury duty? Not yet. If you are, oh, you've been called?
Yeah.
Have you gone?
Yeah. $9 a day.
Were you in school at the time?
No, I was working.
Oh, okay, okay. So the trick is if you say that you're in school, they're gonna say no, then you don't have to come. All right. So a lot of places, most places won't ask for documentation. So just say you're in school all day. All right, I'm in school. Oh, okay. So just let them know that you're in school. Yeah. So other types of taxable income, prizes and awards, right? You go gamble. Is that gambling money free? No. So a lot of times, some of it is not reported based on the amount that you're playing with the cards and stuff like that, with roulette and stuff like that. So it all depends. But no, that is not tax-free money, right? You have to pay on that. If somebody gives you a free TV, do you have to pay anything on that TV? Yes, you do. The fair market value of that TV and the tax rate, right? So, for instance, there was one with Oprah Winfrey. That's one that's generally coming to mind right now. Oprah Winfrey gave some cars away to the audience. I don't know if you guys remember that. And what were people complaining about?
They gotta pay the tax on it.
Got to pay the taxes. Yo, you just got a free car, right? That essentially you could probably sell, right? And you're worried about the taxes on the car. You want her to give you a car and pay the taxes on the car. Come on, man. Stop it. Right? So it doesn't matter, man. Absolutely everything is taxable. Forgiveness of debt. Now, when individuals, say for instance, you're going to lose your home, right? You don't have any money and you're like, you know what? I'm not going to pay on this home anymore. And they forgive the debt. When I say forgive the debt, meaning that you had $100,000 left on your mortgage, right? And they sold it for $60,000. How much of the debt did they forgive them? You had $100,000 left on the mortgage, and they sold it for $60,000. How much of it didn't you pay? $40,000. So what is $40,000? That's kind of like a gift. So you're probably going to receive something called a 1099-C, right? It's a 1099-C, and a 1099-C is a cancellation of debt. Cancellation of debt. So let me just let me show you here. So it's on it, right? So here's the cancellation of debt. So it has here the date that it actually happened, the amount that is discharged. In this case, it would be the $40,000. If there's any interest added in, the debt description, if we're talking about a home, it's going to say like the address of the property, okay? The debtor's name, of course, it's going to have your name. On the creditor side, it will say the name of the bank, like Chase Bank or Wells Fargo, whatever it is. So on debtor's name and stuff like that, this is going to be all your information. And it may say, check here if the debtor was personally liable for the repayment of the debt. Yes, you were personally liable, however, you didn't pay it, right? So that 1099-C is now going to be added as income. So now let's look at Form 1040. Yeah, let's look at a Form 1040. Okay, on the Form 1040, it's going to be line 21. I know it doesn't say it, but it says other income. It says other income there, and then right here, it's probably going to say Chase, or it's going to say cancellation of debt. So it's going to be in this section related to income. So now your income is going to be inflated by $40,000. So what's going to happen? You have to pay taxes on your new tax bracket. So really, did you just give away the house for free? No, you didn't. So although you're not going to be paying the liability of making that mortgage payment every single month in the taxes, of course, the cancellation of debt is even better. But again, that's income every single year, right? So you got to think about that. Okay. So now let's go back here. Let's go back here, and I'm going to go to the application. Okay. Insurance proceeds in excess of the adjusted basis of the property. Now, what's adjusted basis? Adjusted basis. Do we know what adjusted basis is? Okay. I'm going to give you an example of adjusted basis. You pay, do we know about depreciation? Okay. So actually, I'll just give you an example here. I know that's kind of, okay, so I'm gonna go right here. So say if you bought a house for $500,000 and you had home improvements of $10,000, your adjusted basis on the home now is $510,000. That's adjusted basis. Another example, talk about adjusted basis. You bought a car for $30,000. And you know cars depreciate every year, right? So say if we came out with a formula where it depreciates, say, over 5 years, let's say it depreciates $3,000 a year. I'm not going to do a calculation right now because, that's massive. But so at the end of the year, after year one, the adjusted basis is now $27,000. All right. So what it is that it's just either increasing or decreasing what the item is somewhat worth at that time. Okay. So adjusted basis. Adjusted basis. Okay. Example. Okay. Fringe benefits. Oh, we talked about fringe benefits before, right? Yeah, so fringe benefits, remember, those are added benefits that sometimes aren't really a benefit, right? Where the company is giving you, say, a new cell phone, a new laptop, and those may be a fringe benefit, but with that, that shouldn't be added to your income. That should not be added to your income, right? Okay. Let me see here, hold on. Saying here, discounts provided to employees for products or services nobody sold by the business. So what they're saying is here, if they gave you money for your moving expenses, that shouldn't be part of your income. Should not be part of your income. So remember, with some jobs, they may say, wait, we want you so bad to move here, we're going to give you money for moving expenses. The maximum rate that they can give you without you being taxed is $2,000. Anything over $2,000, you have to pay taxes on for your moving expenses. So any job that you see that says, oh yeah, we give you $2,000 for moving expenses. Yeah, because that's the maximum rate that they can actually get a tax credit for. Okay. Even with them giving tuition reimbursement. Does anybody here work at a place where they give tuition reimbursement? Yes. So what's the maximum rate?
52. Well, 5250 is the taxable limit.
Yeah.
And then I think it goes up to like 6,500. And after that, they stop. So.
Okay. Yes.
Yeah, it's like 25,000 over 5 years or something like that.
Okay. Yeah. So I guess around that same number, right? So remember, they're doing the 5250 because it makes sense for them. So those are things that people don't know about. They're like, oh man, my job is great, man. They give me education benefits. I mean, come on, man. They're getting a tax write-off. That's why they're doing it, right? So they're getting a tax write-off, and it allows them to look great, right? That's mainly what it's about. So what they're saying is there's little benefits that you're earning at your job that essentially you shouldn't have to pay for. So the holiday turkeys, the company picnics, that shouldn't be something that, you have to pay back as far as the fair market value, because it should be something that's so minimal, right? So you shouldn't be taxed on the little free food that they're giving you. However, gift cards, $25, it's taxed. So if you look at your W-2 and you see an extra $25 because you receive a gift card from like a raffle or something at your job, yeah, it's supposed to be there. Okay. So again, like we indicated, here's the educational assistance, maybe reimbursed to the employee. Dependent care costs, right? So if they're helping you with daycare expenses, they're going to help you up to $5,000, right? Anything over $5,000, you're going to have to claim as income. So if they gave you $10,000, you're going to have to claim $5,000 of that $10,000 as income. Okay. Non-taxable income. So non-taxable income, we have scholarships, fellowships, life insurance proceeds, right? So when you're watching any type of cold case files or anything like that, and you see the spouses killing each other over these $1 million policies and $2 million policies, it's because it's tax-free, right? They're not going to have to pay taxes on that, right? So don't go saying that Eli said to go kill my spouse for the money. No, it's a bad idea. But yeah, there's some life insurance proceeds with that. And that's why a lot of individuals, they're trying to get insurance on like their grandparents, right? Because obviously their time is getting very limited. However, now you have the high insurance rates because you didn't start it before. Yeah, very expensive. Very expensive. I mean, you're gonna have to have like $100 a month, a couple $100 a month in order to spare. Hopefully that you get that back. I'm not saying hopefully you get it back like you want them to die, but yeah, it's tough because a lot of policies they may say they have to be in for like 2 years.
I think it's like the suicide club or something like that.
Yeah.
If you die within that 2 years, they only pay you back the premiums.
That's it, man.
Yeah.
So most individuals, the people that I really know, that I think that really understand tax planning, they got their babies in it. They get their babies in it. How much are they really paying? $3 a month, $2 a month.
At Northwest, we did like 18.
Yeah.
Really simple.
Really simple, man. Although we know this information, we still don't do it. Right? So compensation for the sick or injury, that's free too. Child support. Remember we talked about child support and not alimony. Child support is tax-free. That's why a lot of people who are receiving child support would rather receive child support than alimony. Welfare is free, right? That's why a lot of people don't want to get a job. They're like, yo, I'm going to stay on this welfare. If I make too much money, they're going to kick me off welfare. Free money.
So if child support is tax-free for the person receiving it.
Yeah.
Is there
A tax deduction?
benefit to the
Nope.
person giving it? So that's post-tax.
Yep. You're just giving your money away, man. So when when you hear these individuals start talking about, yo, man, I'm broke, man. Like, yo, I'm paying the child support. It's in some instances it's actually true, right? Actually, I was renewing my my mother's. I think I told you that, right? Did I told you that? I was renewing my mother's nursing license for the state of New York. So what they said under that, one of the they're asking me questions about, have your license ever been revoked? Have you been suspended? Has there been any accidents? And I'm like clicking no, 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 right? Then the last question was, do you currently owe back payments on child support? Right? And they specifically said, if you owe back payments on child support, we're probably going to suspend your license. Right? So you won't be able to practice nursing anymore if your license is revoked, obviously, right? So if you're not paying your child support, then they're going to suspend your license. But if they suspend your license, then how are you going to pay your child support? Right? Doesn't make any sense, right? So now you're going to have to get out of the field of nursing to be able to pay the child support. So you have some individuals who will never be able to get their license again because they can't make the back payments. Circle of life, man. Circle of life. So again, we talked about the savings bonds interest. We have here savings bond interest, the taxability of that. Not taxable if used to pay qualified higher education expenses for the taxpayer. That's a good one. When we talk about the tax planning, there's a lot of wealthy individuals that will invest into these savings bonds, but with these bonds, it could only be used for education expenses. And if it's used for anything outside of education expenses, then you're taxed on the money that you used, right? So I had a client of mine last year. She used whatever she was setting aside for her education expenses for her daughter. She used it to buy a property, right? So obviously she was taxed on that money because she used it to buy a property. Okay. That's not that important. Gift loans. Imputed interest rules apply to gift loans over $14,000 where foregone interest is in the form of a gift. So there's like a little clause. Gift taxes is something very difficult. And again, if you want to be a tax preparer, gift taxes is its own entity all by itself, right? It's something very specialized that a lot of people don't really understand. It's form 706, gift tax. All right. So normally there's some statutes that indicate up to $14,000 that somebody can give you without you being taxed on the money that you received. Right. So including when you purchase a home, sometimes they want to ask you the source of the funds. Right. So if you don't have it in your bank account today and you go get $20,000 from somewhere, they want to know where the money came from. Right. And I don't like that because essentially they're counting your money too. Right. But that's just what it is, right? So the source of funds, if somebody gave you over $14,000, you potentially have to pay taxes on a portion of it, even though the person was just trying to help you out. And that's something different. So we have something called the OID, which is original issue discount. Let me look up a good definition of that OID. Oh, here's one. Oh, yeah, let me do this. Share application. Yeah, so can you write this down? Original issue discount is a form of interest. It usually occurs when companies issue bonds at a price less than their redemption value at maturity. The difference between these two amounts is a OID. So remember, it may be at a certain amount of $1,000, but they may issue it at, say, $400. Right? So that $600 difference may be a portion that's taxable because they gave you a discount. Okay. So again, you may receive, the discount that you receive may be considered income. Okay, may be considered income. Of course, it has some years down there, the 80s, the 60s. As we noted, tax is very intricate. Okay. Okay, that was it. Any questions on anything?
Yeah, the Social Security, the taxable Social Security income.
Yeah.
So it talks about if it's over the 44,000, whatever it is.
Oh, say that again?
When it talks about the rate at which it's taxed, so it's like 50%.
Yes.
At the low end, but then up to 85%.
Yeah, as
like a progressive tax?
Yes, progressive tax. So the more money that you make, the higher that rate is going to be.
So I couldn't find like a tax table or anything. I Googled it, went to SSA.gov. Couldn't find anything. Or just everything references up to 85%.
Yeah. Let me see if there's a table here. Yeah, a lot of up tos here.
Yeah, but I couldn't find a table anywhere.
Okay, let me see. And this is even at your combined income. Detailed. No.
I'm going to hold everybody up now.
Yeah.
With that, but I just couldn't find anything. I was just wondering.
To be honest, I usually let my tax program tell me.
Yeah, I figured we just do it.
Yeah.
If you're doing a return for someone.
Yeah, man, I don't see any. That's a good question.
All right.
Yeah. No, well, maybe if you're bored and you can't sleep, just start researching.
Yeah.
Yeah.
Make sure you're comfortable when you do it.
Yeah. All right. Oh, wait. So I guess we'll talk about the exam right now, or what are we going to do next week? So what are we doing here?
I vote taking it online.